Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention and other fine folks, to the Sunday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate through the upside-down, topsy-turvy world we find ourselves in, seeking greener pastures on the other side, hopefully coming out healthier, wealthier, and wiser. We've got a bunch of articles today to take a look at. It's Wednesday. Tomorrow, of course, will be the new weekly jobless claims. We'll take a look at those tomorrow. But today, we've got a whole mismatch. I thought there were some interesting articles. We'll take a quick shallow dive at, and the link's in the description below, so you can take a closer look yourself if you like. From Zero Hedge, JP Morgan makes $1 billion from gold trading after paying $1 billion fine for manipulating gold trading. And as I'd mentioned before, these crooks need to be in jail, really, or at least be charged and let the courts sort it out. But honestly, none of that is happening, so they get slaps on the wrist, really. $1 billion sounds like a lot to us, but for these huge, large-cap companies, it's nothing. Just 2 months after JP Morgan was fined a record $1 billion criminal monetary penalty to make sure that not a single banker would end up going to prison for rigging the gold and silver markets, Reuters reported that JPM, having clearly learned the tools of the gold rigging trade, gold rigging being crossed out, has earned a record $1 billion in revenue so far in 2020 from trading, storing, and financing precious metals, vastly outperforming rival banks. So how is that that justice has been served? I really hope that the world starts turning. Culturally, we start expecting more from each other and greater ethical behavior, frankly. Otherwise, we're on a slippery slope to really all sorts of trouble, I'm sure. Anyway, there's some of the different charts you can see. If you want to read the rest of the article, I just thought that was interesting that these folks continue to get a slap on the wrist. Try sell some, up until very recently and still in many states, try sell a few ounces of marijuana on the side corner, and you'll go to jail for years. And yet these guys can manipulate $1 billion worth of gold and end up with a slap on the wrist. Anyway, there you have it. IMF chief urges G20 leaders to maintain policy support as global economy not out of the woods. And of course, these folks can only seem to sing a single tune lately. I commended the G20 countries as a whole for taking unprecedented actions to mitigate the impact of COVID-19, including fiscal and monetary measures that have helped to prevent massive bankruptcies and even deeper crisis, Georgieva said. And she's the she's the International Monetary Fund Managing Director. I also emphasized that the world is not out of the woods yet in terms of this crisis. Cooperation is going to be even more important going forward, Georgieva said, urging G20 leaders to maintain macroeconomic policy support to businesses and workers until we exit the health crisis. And I think that's going to happen. But what we need more than the central banks buying all this bonds and debt issuance and monetary printing is for the governments and the treasuries to actually start issuing checks to people. That's what we need. And hopefully that's coming. Anyway, we'll see if they actually start to think of the common man and woman. Home prices in every major city jump more than double the Fed's inflation target. 1 month ago, we looked at the housing market, which we said was in the middle of a buying frenzy. Today's case Schiller data for September confirmed this, with the 20-city composite index surging at a stunning 6.6% year-on-year, more than 1% higher than August, and smashing expectations of a 5.3% print, and the highest in 30 months. And this is going to end very poorly. It might take a year or a year and a half, but I think by mid-2022, and maybe towards the end of 2022, I'm not sure, but the stock market will have tanked by then, and that will be the nadir for the stock market, probably. But I think that's when we'll start seeing the beginning of the housing financial crisis. We're going to have a stock market collapse, and then we'll probably be followed maybe a year later by a housing crisis. Anyway, that's my opinion. None of this is financial advice, and I've been wrong so far. Hopefully I will continue to be wrong. But if I'm not, things are going to go very, very poorly. Every major U.S. city saw home price increases that were more than double the Fed's stated 2% inflation target, although under the new average inflation targeting, the Fed's so-called target is a fluid number and can be whatever the Fed decides it is. And here are the different states you can see, counties, and how they have increased. September 20th, 2020 is in the blue, and August 2020 is in the orange. You can see huge increases, especially Phoenix, Seattle, San Diego, Anyway, there you have it. From real investment advice. Technically speaking, investors go all in without a net. And I just wanted to show you a few of the charts here and touch on a couple of snippets. It's a longer article, so I encourage you to read it at your leisure if you like. But here you can have a look at the federal government current expenditures going back to 2007, of course, the great financial crisis. And of course, now we're back off the charts. This is the orange line. And the sort of turquoise, greenish, teal color perhaps. These bars are the effective federal funds rate, and you can see it's practically at nothing lately, has been as it was since 2009, all the way through to about 2015. And then the S&P 500 stock price in the darker blue or black, you can see that that's just continues to go up. And here's some another chart that's interesting. The S&P 500 versus corporate profit after tax and real GDP. Again, the S&P 500 is in the dark blue blackish line, and you can see that this is the dot-com crash. The financial crisis was propped up, as you can see, by the orange corporate profits after tax, which is a good thing. So there was some corporates here, but they peaked before obviously the financial crisis, and then crashed as well. Continue to overperform, at least compared to this S&P 500 chart, for the next few years until say 2015, 2014, and then the stock market has been rallying while corporate profits have been stagnant and then lately falling, as you would know. And then, of course, the real gross domestic profit, real gross domestic product is the grayed areas here, so recession, and here, of course, a very deep recession currently. And these are recessions. So things are really, really looking poor. And this is the real gross domestic product. As you can see, this arrow line is sort of sloping downwards. And it does not suggest that real GDP is doing particularly great at the moment. Exuberance abounds. Our Composite Fear Greed indicator, which primarily comprises investor positioning, shows much of the same as bullish sentiment pushes back to extremes. Here you can see it's extreme greed, and the line here is the weekly greed fear gauge. You can't really see it here, but it's right up here by the top of the S&P 500 index in this sort of, I'm not sure what these colors are. They're grayish blue, I guess. Here's a bunch of other examples of the difficult straits we're in, especially the economy versus the stock market. You can have a look at those at your own leisure. And here again, of course, talking about how things are overvalued. See these peaks here in the, I'm not sure what this is, some sort of stochastic, I think. And it's peaking while this is making lower highs, as you can see here. And of course, peaking again. So very interesting. We'll have to see. I mean, this market has remained irrational longer than most of us, I think, ever would have imagined. However, the crux of the matter I thought I'd bring folks' attention to for those who are in the stock market, and this is something I'm doing a little bit with some of my money just to try and ride the last fumes with stop losses. So 7 impossible trading rules. In the heat of the moment, it's easy to get swept up into narratives as the fear of missing out overtakes our logical thought processes. As such, here are the 7 impossible trading rules to follow. And they're impossible primarily because people don't do them, or they find them extremely difficult, but they are certainly helpful. Sell losers short, let winners run. It seems like a simple thing to do, but the average investor sells their winners and keeps their losers, hoping they will eventually return to even. 2 is buy cheap and sell expensive. If an investment isn't cheap, it isn't. Don't make excuses to justify overpaying for an investment. In the long run, overpaying always reduces returns, but of course that's always a challenge. What is cheap? A growth stock that has potential, huge potential earnings growth and sales growth could be quite expensive by other metrics such as PE, so you have to really do your due diligence. And then a stock like Exxon with a very low PE might not be cheap at the moment. In fact, it might be fair value. It might not have a lot of room to run up in the next year or so. This time is never different. Number 3, as much as our emotions and psychology always want to hope for the best, this time is never different. History may not repeat exactly, but it generally rhymes. As it says in the Bible, and as I heard on Battlestar Galactica, all of this has happened before, and all of this will happen again. And that includes our current crisis that we're in, this 4th turning as well, which is the name of a book I encourage you to read. 4, be patient. There is never a rush to invest. There is also nothing wrong with sitting on cash until a real opportunity comes along. Being patient is an excellent way to keep yourself out of trouble, and that's the truth for sure. 5, turn off the television. The only thing you achieve by watching the television from one minute to the next is increasing your blood pressure. 6, risk is not equal to your return. Risk only relates to the loss of capital incurred when an investment goes wrong. Invest conservatively and grow your money over time with the least amount of risk possible. 7, go against the herd. When everyone agrees on the market's direction due to any given set of reasons, generally something else happens, such also seeds to points 2 and 4. To buy something cheap or sell expensive, you are buying when everyone is selling and selling when everyone is buying. In conclusion, these are the rules. They are simple but impossible to follow for most. However, if you can incorporate them, you will succeed in your investment goals in the long run. While the bullish cycle lasts twice as long as the bearish cycle, investors' damage comes not from lagging markets as they rise, but in capturing the decline. Exactly. So I think now, of course, is time to be vigilant. And as you know, I'm expecting stock market to peak, if it hasn't already, within the next, say, 3-4 months, and probably 6 months at the outset. And then we're probably heading into a bear market that will last, I would imagine, at least 18 months or so, if not more. The investor's chief problem, and even his worst enemy, is likely to be himself, from Benjamin Graham. Dow tops at 30K after a flood of 14 trillion in global liquidity. That's how that works, really. And that's the truth. For the first time ever, the Dow Jones Industrial Average has reached 30,000, and all it took was $14 trillion in global liquidity. Here you can see it on the minute chart. It's reached 30,000, and actually I think it ended up at the end of the day at 30,000. So, and here you can see the Dow Jones Industrial Average. This is probably a monthly chart or something. It goes back to 1900, and this really looks quite parabolic lately, but we'll see what ends up happening. And here's an article from the January 2017 Barron's cover. It was not a curse, obviously, which usually, when these things happen, that's sort of a curse, oftentimes a contrary indicator, usually. And then on its cover in January 2020, it repeated 30,000 as well. So interesting. Finally got it right. But I think we're in for a big haircut here, probably losing at least half, 60% or so eventually by the time the bear market ends, which is coming. And here, of course, because it's not the economy stupid, here you can see the Dow, which is doing quite well. And this is the Dow 12-month forward consensus earnings per share. You can see that the two are quite closely correlated up until let's say the mid of 2019. Then they started to detach, and sort of from the beginning of, I want to say, 2020, it's just been a disaster. And here's the global liquidity proxy, right? How this is becoming more intertwined and correlated with the Dow Jones. Very interesting. So who knows how much longer this will go on for. I'm not expecting it to carry on much longer, much past the new year, but we'll see. We'll keep our eyes peeled. And then lastly, from the Northman Trader, Sven Henrik has a blow-off top that he's talking about. 4 vaccine announcements, Janet Yellen to the Treasury, Donald Trump opening the path to a transition, Fed and ECB signaling more stimulus to come, and yet no new signs of highs on the SPX and the NDX, the SPY, the S&P 500, and the NASDAQ. I'm not saying the top is in, but I'm not noting a certain lack of progress in the overall market, and that's what I've been saying. It's feeling a little bit toppy. But we could just be pausing for another last gasp blow-off. Who knows? At the same time, we're witnessing blow-off action in several other indices, and I'd like to highlight the small caps here. A ripping 21% up from the November lows and up nearly 29% since the September lows. Smooth market functioning, the Fed calls the asset bubble they have unleashed. I call it asset price inflation run amok as people abandon all caution and are piling into stocks no matter valuations. And here you can see the largest 2-week inflow to global stocks ever. Just astonishing. And here we were again. We have to go back to 2018 or so before we ever saw anything like that. So, which case, back here was the global financial crisis, I want to say, around here. So you can imagine the devastation this is going to cause when it starts to unravel, if it does. And I believe it will at some point. How long? Who knows? 21% of all US dollars were printed in 2020. Look at this compared to these other years, 2019, 18, 17, 16, 15. Go back to the financial crisis of 2007 and 2008. And there's nothing like that. We go back to this is probably post internet.com boom. This is just ridiculous amounts of money. Anyway, very interesting. You can see here the G4 central banks balance sheet forecast. And here we are sitting at about 16.5 trillion, and they're expecting, well, we're actually probably a little bit up here, I imagine. And by December, they're estimating 25 trillion. By December of next year, 28.4 trillion. And by December of 2022, 29.3 trillion. Who knows? That's a $12.8 trillion increase, or 29% of GDP, by the way. So we'll have to see what happens. But these numbers up at the top here might be a little bit shy of what really happens. The printing will continue until morale improves. Well, congratulations. FinTwit is as bullish as ever was. Even the bears are throwing in the towel. You can see this. The perma bears are in the red here. And of course, back in March, everyone except the pragmatists, whoever they are, were bearish. Now, of course, since beginning of November, roughly, everyone is bullish. They're just crazy times we live in. Here's the small cap 2000 going vertical way out of the Bollinger Bands, as he explains. Moves like this are momentum and short covering pure, and they come with consequences, namely reversion risk and sustainability. Firstly, note how completely incompatible with history this move in small caps is. Here is the monthly candle. You can look at this monthly candle. It's like huge. It is probably bigger, the body at least, than the big monthly candle here, which was probably March, I want to say. So just crazy town. And then you go back to 2010, and you've never seen anything like it. Way outside of the Bollinger Bands. Very interesting. Small caps appear to be literally crashing upwards. So outsized is this move in small caps price is now entirely outside the weekly Bollinger Band. And you can see it here just as I had mentioned. Just amazing. And that's weekly, as he said there. This is not normal. Let's agree on that. Sustainable, questionable, especially in context of a rally ever more dependent on open overnight gaps. These are opening overnight gaps. Just amazing. Look at this big one here. Now, many of these will be obviously closed at some point. Is usually what happens with gaps. Not 100%, but probably greater than 90%, I would imagine. Open gaps have been the hallmark of this market, and while the market is persisting on this unprecedented path, it continues to inform the coming downside risk, as does the IWMs, which I think is the small cap. Yes, the iShares Russell 2000 ETF, disconnect from its 200 moving average, reaching 27% this morning. Look at that, way above the 200-day moving average. This has very seldom happened. You can see it happened here again a little bit, but not as much, and that's when everything fell off the cliff. Happened here a little bit. It seems to happen shortly before collapses, so we'll see what happens anyway. You can see here, this is the PPO. I'm not sure what that is. Some sort of sentiment indicator, perhaps. You could tell me in the comments below, but it's right at all-time highs as well, as is the RSI, almost at all-time highs, certainly suggesting overbought, but we'll see what happens. And here's imagine declaring 2% inflation to be your long-stated policy goal, then printing more money than God and yet failing to reach your goal for 13 years in a row, but still getting uncritically elevated to God status anyway. I think Sven Henrik is getting frustrated with this, as probably are most rational people. Financial stability, they call it. There's nothing stable about the Russell or the global distortions created in capital markets. Oh, folks, there you have it. We'll see what happens. But yeah, everything is looking toppy. It has been really since probably for a few months now. It's just ridiculous that this market had this run-up from this quick sell-off that only lasted, I think, maybe a month or 6 weeks or so. Okay, here's the market summary. So a bit of a mixed bag this morning. The NASDAQ only one in green at up 0.29%. The S&P 500 basically flat, down 0.05%. Dow Jones down 0.2%, and the Russell 2000 down 0.38%. Who knows why? Perhaps there's news out there I'm not aware of. Anyway, there you have it. Let's take a look at gold. So gold recovering a little bit, I think. Yesterday was around flirting with 1800. Now it's at around $1,814. Silver probably much the same. Not in price, of course, but in mood. And of course, silver is holding up much better. It's at $23, excuse me, and 43 cents. So still consolidating towards the lower end of that sort of resistance, which I'm seeing at about 23 even or so. We'll see what happens with that. Just something to watch in the meantime. Okay, and the coin market cap, the cryptocurrency coin market cap up 0.4% last 24 hours, now at $584 billion. 5,990 coins to ignore, most of them. and the Bitcoin dominance has now fallen to 60.8%. So some other coins, obviously altcoins, are probably starting to move forward. Bitcoin down 0.3% in the past 24 hours, but still holding above 19,000, now at $19,146. Ethereum down minus 1.7% on the 24 hours, and now broken back below 600 at $592, and XRP up 0.9% and at 67 cents a coin there. Everything else mostly also down below, except for Cardano up 3.4% at 16 cents. Polkadot down minus 3.3%. So really it's just a bit of a breather, which you would expect, and we'll continue to watch that. So what Americans need, and probably many people around the world, the Western world, around the world globally, but I think it's Americans struggling the most with this, because most Western democracies have a socialized form of democracy, which means that they have better safety nets than Americans do. And so most of them are up here in Canada, for example. If you're unemployed, there are some helpful options for you in order to make up some of your income, which are been rolling out and are still sort of going on, I think, probably until the next, at least for the next 6 months or so. But in America, of course, we haven't had any stimulus payment. We still have unemployment, of course, but I think a lot of people will be rolling off unemployment at the end of the year. So I thought the question would be for the Magic 8 Ball, will there be a stimulus bill passed by the end of the year? I doubt that myself, but let's see what it says. Concentrate and ask again. Okay. Magic 8 Ball, will there be a stimulus bill passed by the end of the year? Without a doubt. Okay, so it's feeling optimistic about that. I don't think Congress and the President will be able to get together to make this happen. So there we have it, folks. Thanks so much for joining me. I hope you're having a great day. And it's a hump week, so we'll make it through almost another difficult, challenging week. Remember to pay down debt, squirrel away some savings, and above all else, dumb spero.